Hello, El Paso. I feel like I have not been live in a really long time. I always look over here to my right because I have my girls like right here next to me. And not only that, I have a very, very good person that's been sticking to my side for many, many years. His name is Ryan Nevades. And currently he is with SunWest. Am I right?
That is correct. Hello, everybody. Happy New Year.
Yes, I'm excited to be here. I'm so excited. I feel like a big gap has been missing because I haven't got my podcast going. And this year I told myself I am going to educate our community for with any little thing that comes about. So I really feel I picked a topic for this week on being able to educate our El Paso community, not only our El Paso community, on what is going down nationwide when it comes to housing and it comes to shopping for a home loan mortgage. So again, Ryan has been with me for quite a while, for many, many years. And, you know, he is a not only a loan officer, but a really great friend of mine that has always given me black and white, right? I love black and white. I love upfront and I love honesty. So again, Ryan, for the people that have not met you, tell us just a little about yourself and what you bring to the community.
Well, hello, everybody. Thank you very much for having me on your podcast again, Jackie. I do appreciate that.
Yeah.
Like you said, we've been in this business for many, many years working together here in El Paso. I've been in the mortgage business for almost 20 years now as a mortgage loan officer, helping families get into their homes for many years, also helping people refinance their current mortgages to reduce their payments, saving them some money, especially during these times right now. You know, saving some money is very important to a lot of families. So with interest rates at an all-time low, you know, it's very possible for us to make that happen for many people. So yeah, that's what I do.
Wonderful. And when you say this, and of course, we're just going to kind of like jump into it because I want, of course, to know and educate the community and get the verbiage out there and the vocabulary out there in the mind of low interest rates. There's everybody that says low interest rates, low interest rates. It's dropped again. It's dipped 14 times in a year of 2020. What is going on with these interest rates? Tell us what the feds are saying. Tell us what's going on and why is it? That's the main question everybody has. Why is it still the perfect time to buy at this time?
Well, interest rates are still at all-time historic lows. You know, I've been doing this for 20 years and I've never seen rates lower than this. Now, there's a lot that goes into, you know, what you're going to qualify for. As far as the interest rate goes, your credit is one of the biggest factors, your percentage of down payment. So there are many factors, your loan programs, and just many factors that go into what you're going to get as far as your interest rate goes. But historically, they're at all-time lows. So right now is the perfect time to purchase or refinance. If you wait for rates to go up, for property values to go up, you're going to qualify for less in the future because you're going to have a higher payment with a higher rate and higher sales price. So right now, you're going to qualify for more home, get more bang for your buck.
Exactly. So when you say, give it to us in a little bit of perspective terms, the lower the interest rate, what does that do for a buyer, for a home buyer?
It's going to give you lower monthly payment.
Yes.
With the lower interest rate, and you're going to be able to qualify for more. So as the rates go up, your payment's going to go up, and your debt ratio is going to go up, which means you're going to qualify for less.
Correct.
Also, the houses are appreciating, and I'm sure you see that in the market as well. So the sales prices are going to continue to rise, and as they do with the rates, then you're going to qualify for less home.
Correct, and I think you hit it on the button. As rates are going down, on the flip side of I'm not going to say consumer, for a seller to put their home on the market, what are some of the advantages of them being able to list their home right now? What have you seen in the back end of that?
Well, I'm sure you can confirm this. The market is extremely hot right now here in El Paso. Despite the pandemic, despite everything that's going on in the world, El Paso market is very stable right now. So I'm sure that you can confirm that houses are flying off the market. So it's definitely a seller's market, I think. And being this, you know, seller's market, perfect time to sell your house. You're gonna see fewer days on the market, faster turn time as far as closing, and
Correct.
there's a ton of approved buyers, shopping for houses right now. So it's
Exactly.
definitely a perfect time to sell your house as well.
Yes, it is a perfect time to sell your house. And me coming on the real estate aspect side of things is we do have a list of home buyers right now that are fully approved. And we can't even, hit the ground yet just because that inventory has not been, it hasn't opened up just yet. So
Right.
it's super vital that if you are on that bridge of wanting to sell, it's a very, very good conversation that we can have together as a team to see how much your house it could be worth in today's market. There may be a good chunk of equity on there that you could use the money on that to put down on a new home, or just get out, right? Maybe you need to just get out and cash out, right? And then use that money for maybe a lower mortgage so that, of course, we can help you out on both sides from selling into buying. So if you agree with me, Ryan, we saw quite a bit of sell buys this last quarter of 2020.
Yeah, I believe, a lot of people were stuck at home this past year, and spending more time at home, you start to see things that you like, you don't like. You might be crammed into this small house with you and your family, everybody trying to work and do school at the same time. So you may, have noticed a need for a bigger home, different area. People are working from home now, so they have the luxury of maybe working from home and don't have to make that commute, so they can pick the area of town that they want to live in instead of someplace they have to live in because they're closer to work. So there are many factors that went into that. But yeah, we do see a lot of people selling their home and upgrading, downgrading. Some people, unfortunately, losing their jobs during this pandemic. But they're able to sell their house, list it with you guys, and get out of it quickly before they hurt their credit, before they see foreclosures, things like that.
Correct, guys. So super important that everybody that's on there that watches this later, if you need out, we need to help you get out, right? Okay, so
Yes,
that's
yes.
one of the things. Now, let me ask you this. When you are loan apping or helping and assisting answering any questions to people that are wanting a, they're on the fence, but they're ready, what type of programs are we, they're usually our traditional programs, our FHA, our first time home buyer, our heroes, our conventionals. And I do want to see if you can hit a little bit on the investment side, okay, a little bit down the line, for the reason being, I do have some clients that are asking me, hey, I saw a house, and I'm really looking to try to invest to add to my, portfolio for 2021. So I want, going down all the options of financing, I want you to hit that little investment one on there too that the company offers.
Okay, sure. So, 2021 just started. And we're seeing an increase in applications. We've seen a 20% increase in refinances and a 16% increase in applications overall to purchase homes. So
Wow.
the market is going to continue to grow and be hot here in El Paso, most definitely. So one of the first things I would say to anybody who's interested in buying a home is talk to me, your loan officer. Let's get you approved. Let's pull your credit. Let's look at your income. Let's look at your debts. Before you meet with a credit repair specialist, before you start paying off debt. I hear that a lot of times. People, we're going to wait 6 months. We want to pay off some debt. It's important to pull your credit to see where you're at right now, to see where you need to be and what you need to do to get you there. And I can help you with all of those things. If you're want to take it upon yourself to pay off debt, to clear up some collections, pay off some charge-offs, you may be working towards things that are not going to help you as far as, the mortgage side. Correct. And, I've had many clients, they come to me after they've done what they feel they need to do, and they realize they didn't help them at all, or it actually hurt them in some way. So,
or they're using their funds to pay off things that they really don't need when they could be utilizing that for their down payment.
Right. They can use it for their down payment. Maybe they're paying off some debt that they didn't need to pay off. Maybe it was better for them to pay off this credit card instead of that credit card, or this installment loan instead of that installment loan. These are things that, that the typical home buyer aren't going to know right off the top of their head. That's why it's very important that you call me, schedule an appointment. Let's pull your credit. Let's look at all your income. Let's verify all your liabilities, and then we can come up with a plan. Right now, everybody's, close to filing their tax returns. So the market does pick up here in the next few months because everybody's wanting to use their income tax returns to purchase a home. So it's very important, if you plan to purchase a home here in the next couple of months, start today. It doesn't cost you a thing to apply with me. You can apply at my website. You can call me. We can do it over the phone, or we can meet at your office, Jackie, and take the application in person. But it's very important to do that now because you want to be ready, especially in this market where you see that there's multiple offers on homes. You want to make sure that you're ready and approved to pull the trigger when you want.
Correct.
If you want to buy in March and you wait till March 1st to do the application, there may be things that you need to work on and you don't have any time to do so. So right now it gives us 30, 45, 60 days to start working on things that we need to make sure that your credit is where it needs to be so we can give you the best possible rate.
The best possible rate and the plan. So again, guys, planning.
Yeah.
Only way you're going to be able to do that, and I know you have like a little gut in your stomach, like, oh my God, I don't want to pull my credit. I don't know what it looks like. I'm embarrassed. I'm shy. I'm this. But you know what? You got to jump in. You got to get with the loan officer because they are your expert. They are, I always call like the counselor. You tell us what we need to do. And, there's some questions that I always have for you still, Ryan, because I depend on you to help me with those questions. So if I'm doing it, you all can do it too. So
absolutely.
Make sure.
And keep in mind, I've been doing this for 20 years and I've seen anything and everything you can imagine on a credit report, and life happens to all of us, especially after this, 2020 year. And, but the thing is, let's attack it now. Let's get in front of it. Let's overcome it, and let's get you prepared to buy your dream home in 2021.
Exactly. Okay, so going back to the type of programs, we left off of the FHA. So what is the FHA, conventional, and of course, I'm just naming them all, right? VA and our USDA, Save for Save. What are those programs?
We have our conventional loan. It's going to be a higher FICO and a little bit more down payment. A little harder to qualify for than FHA loan. FHA loan is going to be your easier option. You're going to qualify for more because they allow a higher debt ratio. They allow for a lower credit score. So that's going to be your easier option.
What's the lowest you've seen though? And I know it's going to have some restrictions on there, but what's the lowest you've seen on an FHA first-time home buyer program?
We can go down to 580. Now, of course, we have to take care of all, look at your credit and take all your debts into consideration, run it through our automated system and get an approval. But we can go down to 580 credit score with the minimum down payment of 3.5%. If you're looking to do something like down payment assistance, we do have those options available. Call me. I'll tell you all the ins and outs, and we'll go over the fine print because, sometimes down payment assistance works for this client, but it's not the best thing for this other client who has available, access to their down payment. So that's what we'll go over when you go through your consultation. But we can go down to the 580 on an FHA. Typically, you want to see 660, 680 on a conventional loan if you're doing the minimum down payment. Now, if you have a larger down payment, we can go down to 620 on conventional loans. So again, it depends on your credit profile and how much you have as a down payment.
Okay. And just by going by that, the down payment assistant program and the hero program, are they kind of alike?
You're going to see that these down payment assistance programs, they have different names. You hear people calling them different things, but in general, they're pretty much all the same. They're going to have the same credit score requirements. Some of them are grants that you don't have to pay back. Some of them are second liens that you do have to pay back. And a big part of what factors into you getting approved for that is going to be your credit score and your overall credit profile. So, and that's where I'll help you out when we do our consultation. But you also, you don't want to just think free money. You want to also look at the terms because typically the interest rate is a little higher than if you have your own down payment, which could mean you pay tens of thousands of dollars more over the course of a 30-year loan than if you were to put your own down payment. So again, we'll go over all of that with you, give you all your options, and then let you make the decision on what's best for you and your family.
Correct, huh? And on the conventional, just because I'm so super curious, what does 15 against 30 years look like right now on a conventional?
It depends on your credit score, depends on your down payment. Typically, your 15-year term is going to be a few $100s more than your 30-year term, of course, but you are saving a lot of, tens of thousands of dollars in interest if you choose the 15-year term. Now, unfortunately, a lot of families don't qualify because of the debt ratio restrictions for the 15-year term. So we qualify them on the 30, but I can also give you the 15-year payment, and you can make that payment when you are able to, but you're not obligated to, and you can pay your loan off sooner.
Yeah, and the refinancing is hitting that really hard. Like, say for instance, the 15 or 30 refinancing. So, are you guys seeing a lot of refinancing since the 2020 COVID pandemic?
Absolutely. So a lot of people are refinancing right now. If you bought your house 2, 3, 4 years ago, you maybe were in the 4s or the 5s. We're doing a lot of refinances right now. And to your point, a lot of people are refinancing from a 30-year to a 15-year, and their payments staying the same,
Yeah.
So they're cutting 10, 15 years off their term, and they're making the same mortgage payment. So,
Oh
it's,
my
again,
God.
tens of thousands of dollars that they're saving in interest over the term of that loan.
Yeah, I just can't stress enough, if you even have properties out there, or you're looking to refinance instead of selling, this is something that I really feel you should do yourself a favor and refinance, because
Absolutely.
you're going to be saving so much money and paying off your homes a lot faster. So to me, you need to do the refinance. Why wouldn't you?
Yeah,
So,
there's people are at home right now. They have access to all their documents at home. The application literally takes 15, 20 minutes online. You can upload all your documents to the website. There's no reason for you not to do it other than fear of your credit or your current situation, which
correct.
we can go over. I do want to make another point here that a lot of people purchase homes on FHA loans because it's the easier program to qualify for. But as you're in your home, as your your job stability or whatever, your credit is increasing. So I've seen a lot of people right now refinancing from an FHA loan to a conventional loan,
Yes,
which
that's
is
what I mean. Yes.
also saving them a lot of money because many times they're able to terminate the mortgage insurance that is associated with an FHA loan. On an FHA loan, you're paying that for the life of the loan. On a conventional loan, you can terminate that after 20% equity. And if you've been in your house for a couple of years, you probably have it, and you can save 150, 200 bucks just by terminating your mortgage insurance. So that's another great benefit into looking to refinance.
Yes. And a lot of people don't even know right now too, that if they had a conventional loan when they first got the home years ago, that could be, I don't know if they're still charging at the bank, but they should make sure that it's still not on there to get it removed. That could save them, some money there also.
Absolutely. If you've been in your house 5, 6, 7 years and you've been making your payments on time, of course, you probably have the equity, and I'm sure you'd be happy to do a CMA for your clients to kind of give them an estimate of where they're at. But if you have 20% equity in your property, and you have to call the lender and say, hey, we've got this equity, we want to terminate our mortgage insurance. Sometimes they'll do it on their own, sometimes they won't. But if you need help with that, we can look into that as well. Save you 150 bucks just because you have the equity.
Yeah, the bank's going to keep on collecting, guys. So if you know that
they're going to get their money.
that have that 20% already hit in equity, let's do a market analysis. Takes me minutes to do. I'll send it over to you, and then you can call and get that removed. It's the insurance that the bank charges you in case of default. So quick, since we're on this topic, FHA gets a conventional. Why the MIP or the PMI? What's the difference?
Well, they both have mortgage insurance. On an FHA loan, you're going to pay an upfront fee of 1.75%, and then you're going to roll that into your loan. You don't have to pay it out of your pocket. But again, you're adding to your loan balance, so you're increasing the amount that you're financing. And then they charge a monthly mortgage insurance premium as well. So you're getting charged twice on an FHA loan. And like you said, the mortgage insurance protects the bank against you defaulting on that loan. On a conventional loan, they charge the mortgage insurance through a private mortgage insurance company. So your rate will be determined by, again, your credit scores and your down payment. Typically, it could be a little bit higher than an FHA loan, but you do not pay the upfront mortgage insurance on a conventional loan.
I like that a lot. So make
Yeah, so
sure.
the conventional loan is going to be the better option if you have the credit scores and the down payment to qualify for it.
Yeah, so I would definitely seek both options. So, get a comparison if you qualify for both so the lender or the loan officer can break it down for you. Take your time
Right.
when you're looking at your fee sheets because you want to make sure where is your money going? What is the interest rate? How much are you going to be saving on a conventional or an FHA? So look at the long run. I know we're all just racing to like, oh my God, I qualify. But it's always good to get second opinions as well. You want to make sure that you can get at least 2 loan officers, and I do like this, like I feel it, 2 loan officers to give you the best rate. And what I like about that too is that you can make them compete with each other. Like, hey, who's going to give me the better loan? Who's going to give me the better rate? Which fees are less? So a lot of questions. Make sure you have the agent to guide you and to lead you because our work is a little bit more than just showing homes. It's making sure that we're putting you in front of the right people to get that best rate and fees over the long run of your 30 or 15 years. So touching back, let's dip into a little bit of the VA. So if I have any of our military clients that, our video does get to reach, what do we have to offer for our veterans?
Well, we have, one of the best loans that you can one of the best loans you can qualify for is going to be the VA loan. It's 100% financing, so no down payment, and no mortgage insurance, which is really, really nice. Again, that could be $100 to $200 a month.
Yeah.
So, and they do charge a funding fee. That's something the VA charges to insure the loan, and you can roll that into the loan, so you don't have to pay it out of your pocket. But it is going to be the best option available, and we do a lot of those. I know we've done a lot together. Very familiar with the loan programs and how to qualify. We also can go down to a 580 on those VA loans for 100% financing. Again, we have to run your credit.
Wow. Goodness.
Yes. Mm-hmm.
Okay. So we got to kind of see like the VA similar to an FHA, just minus the down payment, the MIP, right?
Correct.
Okay.
And the rates are going to be very comparable. So, and again, our rates are extremely low right now. Now, if you
What's
want
the lowest you've seen? Sorry for interrupting you. What's the lowest you've seen in these past couple of days?
We've seen rates as low as 2.25% right now on a 30-year loan for VA buyers. So again, it depends on your credit, of course, but we have locked in some loans. And to your point earlier, you were talking about having approvals with other banks.
Yes.
It's not always about the rate. You always want to make sure you're checking your fee sheet, because that's going to tell you what the bank, if the bank is charging you for that rate and how much they're charging you for. I've been able to compete with a lot of banks lately where their rate might be a 1/4 point lower than mine, but they're charging 1% origination fee or a discount point to get that rate. So, it's very important that you ask your lender for a fee sheet, so you can see what the rate is and how much they're charging you for it, because a lot of times they won't disclose that information. They'll provide it to you, but they won't point it out to you. And a lot of times if I'm charging the same fee as bank A or bank B, my rate is, has a potential to be lower. So you always want to get that second opinion, and that's something I can help you with as well.
Yeah, and you got to kind of consider like your loan officers like a doctor, right? Like the first doctor tells you you have XYZ disease, so you don't qualify right now, right? Or you're not going to make it. That's horrible.
Yeah.
But if you go to a second doctor, a second opinion, they may be seeing something totally different that other lender cannot see. And, sometimes it does take experience in a loan officer for the reason being they could think outside the box. How can they get a loan? And let's be honest, there's been a lot of places where I have had denials in other places, and I bring them over for the second opinion, the second doctor opinion, and we're approved.
Absolutely.
We're qualified. We just need to do a little bit of things.
Right. So you've brought me a lot of loans over the last couple of years where they were denied at lender A or whoever it is, and they give you the approval letter. They take it all the way to the day before closing. They tell you they're not approved. You've brought those loans over to me, and we've been able to close those deals. one of the things you want to look at when you're working with a loan officer is how long have they been in the business? I've been doing this for almost 20 years. I'm very good at structuring loans, thinking outside the box, like you say, setting up a plan of attack to get you approved. So there's just a lot of things that come along with the experience that I have in today's market. So we can definitely help you with that.
Correct, because at the same time, guys, we're not here like there's some, that don't want to do the deal because it's too tedious, right? I've learned with
Yeah.
Ryan that there's no tedious in a loan, especially with my clients and with our company. There's no such thing as tedious. It's all about relationships. So if you can't do my tedious files or my workable files, then I don't want to work business with you. I don't like to work with loan officers that cherry pick deals because it is what it is. So that's why you've been with me for many, many years, because I've never cherry picked. I don't believe in cherry picking,
Right. We work along. We work.
Correct. And we work as a team. It's a plan and we get there and we execute it. And guess what? If you have to get a little bit more gray hairs like me and, Ryan, we're on a daily. If we got to work harder, then that's what we do. That's what we do. So what I'm trying to get at with this is VAs, FHAs, conventional loans, USDAs. Let's talk about USDA. And let's talk about it amazes me how not a lot of people know we're loan officers. That's why we're going to have this on a weekly market USDA. Tell us about USDA. I know it's in a certain area here in El Paso, but I feel like we've kind of like let some of our buyers go on not qualifying for this USDA and saving a down payment in their pocket.
Yeah, you don't hear much about the USDA. I think one of the reasons is not a lot of loan officers are familiar with the program. You do have to run it through a different system. You have to get approved for it. So I think the knowledge is probably not there, but there are a lot of homes in El Paso, typically east of East Lake and the Horizon area. Now, they do have to be in an approved eligible area to qualify for this financing, but it's a great loan. You have 100% financing, no down payment. The rates are very, very competitive. You are going to qualify for a little bit less because of the debt ratio requirements, but you don't have mortgage insurance. So your debt ratio is going to be a little bit lower anyways. So it is a great, great option. If you don't have a down payment, if you're looking for favorable terms and you have good credit, we can always look into that USDA option. I've done many over the years. I'm very well versed in that loan program, so we can definitely help you with that. Also, I wanted to bring up one other thing. You were mentioning, if you get denied at bank A or B and C, give me a call because in general, most banks underwrite to the same guidelines, but some banks have what we call overlays, and they may not want to do down to a 580 on an FHA. They may want a 720 on a conventional score. They may max you out at 43% DTI, and we can do 56. So the requirements are different at every bank. And I believe that I've aligned myself with a bank who allows for a little more risk than most banks will tolerate. And that's how we're able to get so much more business done.
Exactly. Because there's some that will say you qualify for 200, but they really love a house for 220. So we'd be able to bring it over. Your DTI is maybe a little bit higher, your percent. So we're able to make that up.
Right.
That. So again, to me, I think everybody should be getting second opinions everywhere. I mean, I've done it.
Absolutely.
So everybody should be able to do that because you want the best deal for yourself.
Yes, absolutely.
So USDA is super important. I feel, if you're looking in Horizon, and if it's not with me, I mean, I love to share. I love to share to everybody. If any realtors out there that don't know about the USDA or any consumers out there, buyers that are questioning what this USDA is or never even heard of this program, get with one of us. We'll answer any type of questions you have. I think I've done quite a bit of USDAs with you, Ryan, and they've been very successful with a 0 down payment. Let's go and hit when it comes to somebody or a buyer wanting to buy, they have the credit, Their DTI is really good. They're qualified, but zero down payment. Give me some ways on how to come up with the down payment, or where can they get that down payment? Go from there. Let's shoot for what you've seen as far as down payments.
Okay, so I think one of the things we're seeing right now is people counting on those stimulus checks to use towards a down payment,
How much
right?
have you got? 600?
Yeah, it's $600, but that will put a dent in your down payment. But right now, a lot of people are banking on their tax returns.
Yeah.
Now it's tax season, so a lot of people are going to take that money and use it towards their down payment.
Correct.
Now, if you need some type of credit repair, you need to pay off some debt. Maybe you can use that towards, paying down your debt or fixing your credit.
But don't do it yet. But don't do it yet until they pull
very important.
You can tell them what they need to pay down.
Very important. Set up a consultation with myself, and we'll tell you what your options are, and you can decide what you want to do. But yeah, so people are using their tax returns as their down payment right now. You can also get a gift from a family member, so it doesn't have to be your own funds. We'll tell you how to structure that gift, so don't move money around. We'll tell you how to, how to get it, who you can get it from. We'll give you the gift letter, all those things. You do want to make sure that your down payment is sourceable. Okay, if you have cash at home, you'll want to deposit that in the bank right away. But before you do, again, call me.
Under the mattress money.
Yeah, if you have money, under the mattress, send me your address first, and then I'm just kidding. But you do want to
the address first.
You do want to make sure that's in the bank. But before you do that, you want to consult with us first. We'll tell you what the best way to turn those unsourceable funds into sourceable funds. There are guidelines that we have to follow, but you can get a gift from a family member or friend, and the down payment assistance options as well.
Correct. Yeah. That's really good. That's really good, because there's a lot of people out there that don't know, like, how do I come up with my down payment? I don't have a down payment. First, if you don't have a down payment, see if you qualify for the down payment assistant program. If not, we're going to go and, show you how to, or not show you, where you can utilize getting any type of down payment.
Right. Or look in Horizon on the USDA program.
Correct. The USDA in Horizon, we were just talking about that.
Mm-hmm.
And interest rates are pretty much market, right? Just kind of like the FHA.
Yeah, they're very, very competitive, very similar to FHA. Again, it depends on your credit and all that stuff, but you'd be very, very pleased with those USDA rates. So if you're looking to buy here in 2021, act now. Let's get your credit pulled. Let's set up a game plan, and let's make sure that this is your year to become a homeowner.
Correct. And then there's other, if we pull the credit and there's a plan, if it's 3 months, 6 months, 9 months, a year. I've had this podcast before. And if you feel, Ryan feels that you need a little bit of points boosted or a credit repair consultant, I hate to think when people tell me credit repair, it just feels like untrustworthy. But we do really utilize a certain individual here. I've had a podcast on him before. His name's Hector. And I don't promote anybody that I haven't done business with. So I've done personally business with him many years ago. And he did a phenomenal job on my credit. And he's been working with us for a long time, right, Ryan? Like 5 years. We have successful stories. Yes. We have some that are coming out right now, and it takes a little bit of time and dedication. But if you're willing to give it all you have to get into homeownership, then Ryan will put you with Hector to a consultation on what we need to do to improve that. So, we're all human. It's all happened to all of us, with dropped credit scores or whatever it may be. Just know there's a way for it.
Absolutely.
Yeah. So you already answered the question I was going to ask you, how important it is to make the jump now rather than later. And it would have to be, do you see this going on for like a whole year, another year of the low interest rates, or do you see it changing?
I think they're projected to stay low, stabilize the market, but again, it doesn't mean life doesn't happen and pandemics and all kinds of crazy stuff that we've been seeing over the last couple of months. And any one of those can trigger, an interest rate hike. So again, there's no time like the present. Let's act now. Let's set up a plan. Yes. Let's get you on pace to become a homeowner this year.
Correct. And I do got to, just in case any realtors are out there, consumers, what's going on? What's up with these appraisals lately? Just because we've been so busy, what's the delay with a lot of these appraisers and, all over with every lender? What's going on with those right now?
Well, right now everybody's trying to refinance their homes, and like I said, the market is hot for purchases. So there's just a huge backlog of appraisals orders. There's a limited number of appraisers in El Paso, and then I'm sure that they have to adhere to all their COVID restrictions and protocols. So it's just causing delays, and this is just something that we're going to have to get used to, I think. One of the ways we can combat that is to order the appraisals as soon as possible. Get your order in prior to the inspections. If we need to reschedule or cancel, we can. But you just want to get that process started right away. Turn time can be as soon as 2 weeks. I've seen some take 6 weeks. And again, that
take a day.
Yeah, it really depends on
how is this a day? Somebody went out there, got the order, and did it the next day, and then you have others that are like 4 weeks in. What do you have for us to say as far as like real estate agents? Because I have some that are super workable, working on the other side, and then I have like other realtors that are gouging me and just want to cut us because we don't have the appraisal yet. So, what message do you have for us as a real estate community and people that are buying about these appraisals?
Well, we have to order these appraisals through an AMC, an appraisal management company. They're the ones who contact the appraiser. They're the ones who schedule everything with the appraiser. They're the ones who receive the appraisal when it comes back. So unfortunately, we don't have much control over that. I think we just all have to be understanding of the current situations and patient and be proactive. Like I say, make that appraisal order as soon as possible. A few tips, so make sure utilities are on, so we don't have to go back for a final inspection. Look at the FHA guidelines and see if any repairs are going to be required that you can spot up front. Talk to your seller about, fix those before an appraiser goes out there, so you can avoid having to order a final inspection, which could take another week or two after repairs are done or the gas is installed. Exactly. So I think the theme here is just be proactive and make sure that we're looking ahead and avoiding those delays as we can.
Love it. Love it. Yes. We do have a question on here. Guys, this is the time to shine. This is the time to comment. Okay.
If owners fall in a tough spot and they go on to forbearance or deferments, is refinance opportunity still available?
Did you hear that, Ryan?
No, I didn't.
Okay. Now there is a question. If owners fall in a tough spot and they got on a forbearance or deferment, is a refinance opportunity still available?
I guess the short answer is yes. Depends on what loan programs you're refinancing to and from. Depends on when you took your deferment, when you come out of your deferment. There's just a lot of different factors. But yes, you can refinance your loan if you took advantage of a COVID forbearance.
Okay, so I think that's more for them to consult with you.
Absolutely. There's a lot of moving parts there. There's a lot of stipulations. So definitely let's, call me. We'll take a look at your situation. Let me get the details. Let me do my research, and then I can give you an answer. But it is possible. I've done a couple already.
It is possible, and like I mentioned to you guys before, and I did I don't know if I did a little video on it or not, but please do not let your home go to or fall into a foreclosure. I could almost, no, I'm not going to say guarantee, but there's a good percentage that you have accumulated some type of cushion or equity in your home that you can utilize before going into a foreclosure or a pre-foreclosure. Please don't be afraid. I mean, I'm going to stress this all year till you guys get it. You do not let your home go. There's options. There are ways. So, I know you need that relationship and somebody to trust, and I can guarantee you this, that's what I'm all about. I've been there. I've done that, and I was afraid to speak about it, but I'm not afraid to speak about it anymore because I could help tens of thousands of people all over our El Paso community, guide them and lead them out of being afraid to, or maybe they've already, send the notice of foreclosure. I don't know, but I cannot help you, or our team can't help you if you don't reach out. And that would be me going in there, getting it for sale, other options that could be out there to save your home. Please don't be afraid to ask, because again, you may have a good amount of cushion inside of that house that you don't even know. And it's your money. You've been paying and accumulating it all these years. Why would you let this home go? Okay.
Right.
So please, from the bottom of my heart, get with us so that we can guide you and lead you in that aspect of way. Or, if you just want to sell and get into another home, we get Ryan involved. I do want to emphasize as well too, that our office is open. So, you just must wear a mask. Ryan has been coming in here on one-on-one consultations. So we are on a daily meeting people here in our office. So we are following safety guidelines, but if you feel a one-on-one it's not good for you because, because of the COVID situation, we do Zoom calls just like this. Ryan will be on one screen, the customer on the other, and we will literally have our consultation just like this. Okay.
Absolutely.
So, remember, we've turned into a virtual world. So it's something that everybody's going to have to get used to. So either that, or you do the loan app. If you're not good with computer, we could do it on the phone.
Right.
Very easy, very secure. What are other ways we can do?
Well, pretty much those three options:
That's
online, over the phone, or we can do a consultation in person. Mm-hmm.
Yeah. The whole idea is just getting in, guys. But Ryan, I told you 15 minutes. We're on 41 minutes.
Wow.
But that's called good conversation and good knowledge to be able to relate to ourselves and to our community. I love my El Paso community, and I just think that we need to educate just a little bit more, and we'll be a-okay. But until then, Ryan, we want to thank you. Is there any last words?
No, just start now. Don't delay. A lot of people come to me and say, "Oh, I've been turned down by many banks," and or they don't know what the credit's like, and it's great. They qualify. So you don't know.
What they think it is.
Yeah, you don't know where you're at. Let's find out where you're at, and let's set up a game plan for 2021.
Let's do it. Until then, guys, God bless to everybody, and I
God
will
bless you.
look forward to seeing you guys on the next podcast. Talk to you later.
All right. Thank you for having me. Have a great day.
Bye.